Hey everyone, welcome to my channel. So today I wanted to talk about how to invest for beginners. Before we get into this show, please make sure to hit that like button and subscribe to the channel. I have 77% of people who watch my channel who have not subscribed yet. 77%. So I truly want to make an effort to get that like and subscriber count up so that I can continue to produce the best content for you, and I can continue to improve not only the aesthetics but my content. And the more and more that I do these things, the more I'll be able to articulate this type of content for you all. So please hit that subscribe button on YouTube and on Rumble, and we'll get right into the show. All right, how to invest for beginners. So I'm going to talk strictly about the stock market today. So if you were interested in some real estate content, look at some of my previous videos in order to get some real estate advice. But this is going to be strictly about the stock market. I'm going to go over dividend investing because that is what I primarily focus on. Yes, I do have some growth stocks and we'll talk about that a little bit, but this channel is mostly going to be about dividend investing. All right. So the first thing you want to do is get a list of your top 10 favorite companies. That's right, your top 10 favorite companies. A lot of people don't really understand that a stock is actually a business, right? Apple, the company that you go to buy your phone, is actually a business. It's a stock also in the stock market. You're buying that business. You're buying a portion of that business. Without you, that business would not be as profitable as it is. And so, what can you do? You have to evaluate how good you think Apple is going to be in the future, because we're not talking about today. We have to evaluate what it will be in the future. And so, if you're excited that Apple just dropped this new phone, that's great. A lot of people are. But it'll go up and then it'll go down. They'll say, oh, the stock market is volatile. But the truth is that that's just a blimp. You have to understand what is innovating, what is disrupting the market. Is Apple the most innovative company in the telephone market? If so, then it will continue to improve and it will continue to go up in value. If there is any competition that is able to compete at a level of which is at least similar or equal, then you'll see some of that share and profit being taken away. So, again, get your top 10 favorite companies and then start to evaluate them. You want to look at them on a yearly basis. Are they profitable or not? To be honest, if it's me, I don't care if they're profitable in the first year. In fact, when I look at the year chart, I would hope that it's actually down. You know why? Because that's a discount. It's discounted for the year. That is always a good sign for me. When I look at the 5 and 10 year, I need to see that it is going up increasingly over time. What does that mean? That means I cannot see red in the 5 or 10 year. If I see red, that means over the long term, I can expect that this company is going to continue to lose value unless something innovative is on the horizon. Unless I saw something in the news or something that the company said that makes me believe that they're ready to take a turn for the better. So with that being said, I'm okay with 1 year being negative, but I'm not okay with the 5 and the 10 year being negative. I need to see 32% or higher returns in that 5 year mark, and I need to see 100% return over a 10-year period. And that's how I evaluate just the percentages on whether or not I would invest. Then I like to look at the expense ratio if I decide to go with a dividend. If I decide to go with an ETF. ETF, I'll save that for a whole nother video because that's a lot of information. We're talking about strictly stocks on this video, but I just wanted to put out there that ETFs have expenses and you need to account for that. So what I would suggest is when you have that list of your 10 favorite companies and you've evaluated those things, next thing I want to do is evaluate whether it's a blue chip company or not. If it's a blue chip company, that means it's in good standing. It's a company that is top tier. It may not be a dividend aristocrat, and we'll get into that in this video, but it's a company that's been around a long time, has consistently been going up, and has consistently paid out on time as well, right? That's a blue chip company. Some blue chip companies would be like Coca-Cola. Another blue chip company would be McDonald's. Another blue chip company, just off the top of my head, would be Amazon, right? And so Walmart is a blue chip company as well. And so these are just a few that I'm rattling off the top of my head. I think I own all of those except Amazon. I don't own any Amazon stock. And if you decided to buy Amazon stock, that would actually be a good investment. So that is something that you should think about. So with that being said, again, don't take my advice. I'm just an average guy on YouTube. I'm just giving you some pointers to look at. Just because I don't buy something specifically doesn't mean that you shouldn't, because they can still be really, really good companies. With that being said, another thing is a lot of people are fearful of the markets. Don't be fearful. Don't think, oh my goodness, I'll lose money, and so I'm not going to put any money in. The truth be told, I have lost money in the stock market when I was initially starting. And I think I've been in the markets now for over 9 years. But when I started to feel like I was an expert, it was actually after 7 good years of stock market investing. And so it took me 7 good years to figure out what I wanted to do in the stock market, whether I wanted to be a day trader, a swing trader, whether I wanted to be a growth stock investor or dividend investor, learning what drip investing meant, learning what compound interest meant, learning the expense ratios versus the dividend ratios, learning what percentage I should seek to gain, which is about 7 to 11% per year, learning how the stock market actually works. If you buy the S&P 500, you'll have 7 good years and 3 bad years. The good years will be much higher than the bad years. And so it evens out. You'll make a lot more money if you just invest over a period of 10 years. So if you invest in the bad year and it goes down, just know, hey, it's already gone down. You got 2 more bad years and 7 more good years in a decade, right? So when stocks go down, everybody's like, oh, see, I told you so. All I'm looking at is a discounted price. This is where you truly make your money. This is where you truly get paid. And so for me, now that real estate is all over the place, I now have the opportunity to buy stocks at a discount. And to me, that is a blessing. All my money can go into discount businesses. Sign me up. That's a blessing to be able to dive into that right now. And so do not be fearful of the markets. One thing that Warren Buffett ever said, when it comes to the stock market, you'll make more money in the market than timing the market. You have to put your time in the market instead of trying to time the market. Do not time it. Just put your money in what you believe is the best for you. The way I evaluate companies is, do I like the company? Let's just use Amazon as an example. Do I use the company? Do I purchase products from that site? And do I do it frequently? Do I really like the transaction? Is it customer friendly? Do I see growth potential? Are more people going to use it, or is it stagnant? Kind of like a McDonald's or Amazon, right? How many more people can be on this product that's not already on the product? And then what are their plans for the future? When you have those 4 things, and then you look at the 1 year and it's up or down, and you look at the 5 year and they're above 32%. You look at the 10 year, they're above 100%. Now you're like, oh, they have everything that I need. No bad news. They're innovating. They're trying to improve. And then, if you really want to dive deep, what is the competition doing? Alibaba, or who else is trying to disrupt that market? Who else is trying to gain shares? eBay, right? What is the competition doing? StockX and all these other platforms. And if you can confidently say the competition has nothing on this empire that is being built, then you're in a good place. You can check that one of the 10 companies, put it to the side. Number 3 or 2, wherever I'm at this point. How much is too much? So if you say a stock is worth $200, but you only have $100 to invest, don't go looking for those cheap companies just because it's cheap. Do not do that. I'm telling you right now, don't make those little mistakes. Do not buy a company just because their dividend is 15% instead of the company with a dividend that's 2%. You got to look at the growth. If the company that has a dividend of 15% is growing at negative 2% a year, why would you invest in them? Or here's another one. A company has a 10% dividend but grows at 5% every single year. Meanwhile, there's a company with a 2% dividend. It costs $500 more and it grows by $100 every year. I'm taking a company with a 2% dividend. Even though it's more expensive, I'm going to get in at $500 and it's going to be worth $600 next year. That means my dividend that's 2% is now 2% of $600, not 2% of $500. So I got a 2% dividend at $600, but I only put $500 in. A lot of people don't think like that. You're so worried about the 10% dividend on a $50 company that went up to $53 the following year. Wow, I'm so impressed. I'm not impressed. I am absolutely not impressed. And if you're watching me, that's the phrase we're going to use when people invest in companies and don't think about that type of stuff. We're going to say we're absolutely not impressed because we're looking for growth dividend companies. We're looking for companies that not only pay a dividend, but actually go up in value. And I'm not talking about no 5%. If the average is 7 and 11% returns, you at least should be making, I would say, at least 9% returns. A little disclaimer, I make 22 to 28% in the stock market every single year. No matter if the stock market is down or up, I have never had a losing year in the stock market. So if you follow these tips and steps and you invest in what you like, you should be able to replicate some of that success. Some of it. At the very least, you should be above 11% returns. If you can be half as good as me, you should be doing at least 11% returns. And mind you, I still invest in some companies that are not performing well. I have 30 stocks in my portfolio, and I would say, just like the S&P 500, I got about 7 companies that is carrying all 30 of them. Now, that's not to say all 30 are bad. There's a few making money. I think I only have 6 stocks, maybe 5 that are not making money right now. Like literally only 5 out of 30 that are not making money right now. But if I didn't have those in the first place, I would be maybe in the 30% range. So even though we like some companies, we'll still make some bad picks. But when you diversify a little bit like I have on 30 companies, it'll even out. And just some notable mentions. Tesla, although it's not a dividend company, it is my most highest profitable company in my portfolio. Apple. What's another one? Facebook right now, and I bought Facebook when it was very, very low, when it was super discounted, when nobody else was going to buy it. So if you buy it now and you think you're going to make $100 an hour, you're not, right? Literally, that stock went up 97% in my possession because I bought it when it was cratering like a rock. I think if you look back at my channel, when I said it was down negative 34% and I was telling everybody to invest, I was down negative 34% on Facebook. I was down about at least $200 to $400 on Facebook, and I was putting in some money, okay? The more it went down, the more I put in, and now I'm up 97%. Imagine that type of event, that type of turnaround, right? So I'm just completely grateful that I don't time the market. I just put my time in the market. And for all of you that's scared of investing, the way I personally look at it, you may look at it differently. I look at it in the sense of, if you don't invest the money, you're going to spend it. You might think that that's okay because at least you got to use it for some enjoyment. But the way I look at it is, you use it for some enjoyment, and then what? And then that time has passed. That day is over and done and gone, right? And then we're stuck with the reality of the fact that we don't have any money, we don't have any assets. And so I urge you to continue to focus on building these investments, building these steps. And even if you can't purchase the full stock, buy a piece of it. If you can't buy a whole Walmart share, buy 10% of one stock. And every single day you kind of build that month over month over month. And make a goal. I'm going to own one Walmart share. Or I'm going to own one Bank of America share. And then I'm going to own 2 Chase Bank shares. And then I'm going to own 1 McDonald's share. And then you continue to do that. And when the dividend starts coming in, it'll start to help you to buy more companies, right? And so that's the process. It takes time, but it starts to build over time. I promise you, if you do that for at least 4 good years, you'll start to see some momentum that you've never seen before, and you will be completely mind blown at how far you've gotten. Just invest every single month, every single week, every single day if that's what works for you. Me personally, I do a lump sum payment at the beginning of every year, and I do a payment every 2 weeks in my individual stock market account. So that's how I do it. But some people are every single day $5, or some people are every single month $300. Whatever it is, you figure that out for yourself and you get to work. So don't be fearful. Plan ahead. Figure out what companies are best to invest in. Do not go for the cheap stuff, and make sure that you are going for profitable companies with a future, that actually have a plan for the future, and you also are watching their competition. Make sure you use these companies and that you actually like these companies, and that you see a path for them to increase profits over time. If you can identify all those things, that is the company that you should be invested in. I think this is a little bit advanced for a beginner's course. I hope I didn't scare anybody off, but truth be told, this is how I analyze stocks. And if you wanted the real deal, raw, how I do things, this is how you do it. So if you got a lot of information from this video, please make sure to hit that like button. And if you haven't subscribed already, who else is giving you all of the sauce? Who else if not me? I'm literally telling you how I invest. Sign up, hit that like and notification bell, and let's get to work. Let's make some money in 2024. You hear me? So thank you all for tuning in, and I will see you on the next one. Peace.